Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, there is quite a number of things that have already happened in the markets. So there's a lot to process. And we've had the better part of the week. So we've had quite a number of news announcements. And going forward, I think we only left with one major event. So we'll be looking at a quick highlight of what happened over the week. We look at the key economic events that happened, try to understand what it means. And once we go through that, then we look at the next data point, which is the non-farm payrolls, which we're expecting tomorrow at 3:30 p.m. and try to speculate on the key price levels in the markets. So as you all know, this is not investment advice, neither is it a recommendation to trade. So you should always do your own due diligence. And of course, if you need a professional, then you should seek one. So hello, Mercy, and welcome to the session. Always gratitude to have you on the session. So let's begin with the economic calendar. So here is a highlight of the economic calendar. As you all know, Monday was a public holiday. So we had some data coming from China on Sunday. That is both the manufacturing PMI and the non-manufacturing PMI. Manufacturing slowed down to contraction side, that is below 50.0, from a previous reading of 51.9 down to 49.2. However, services remained strong from 58.2 down to 56.4, but still within the expansionary side. So after the holiday on Monday, we came in early on Tuesday to see the Australian dollar pick up the week with the volatility. So with this volatility, it was coming from the interest rate announcement, where the Reserve Bank of Australia surprised the market with a 25 basis point hike. So we were expecting that the Reserve Bank of Australia would maintain rates at 3.6, but instead they went for 25 basis point to push interest rates to 3.5%. So since then, the Australian dollar has been relatively strong before the US dollar regained strength as a result of the news that happened during the week concerning the US dollar. So then towards the end of Tuesday, we saw the JOLTS job openings coming in higher than expected at 9.59 million, lower than expected at 9.59 million, compared to an expectation of 9.74 and a previous reading of 9.97. So there is less job openings. So in the address yesterday by Jerome Powell during the FOMC press conference, he basically mentioned that the labor market is currently very tight and very hot. And what this basically means is that the demand for labor far outweighs the number of people available to take on those jobs. So that's why we are seeing quite a large number of job openings because there's less people available to take on those jobs. So the direct consequence of this is that if there's more companies looking for employees than employees looking for jobs, then they will tend to offer higher salaries. And this also sends a message to the people who already have a workforce to increase their salaries in order to retain more talent. So as a result, we continue seeing increased wage growth, which is working against the Fed's target of having slower wage growth. So then we had employment data early in the morning on Wednesday. In New Zealand, unemployment remained at a level of 3.4%, just like in the previous month. The expectation was that the unemployment situation would worsen to 3.5%, but in fact, it did not worsen. So the quarterly change was expected to be 0.5% gain, but as a result, we saw 0.8% gain, indicating strength and resilience of the New Zealand economy. And this basically led to a rally in New Zealand dollar against other currencies. Then later on, we had the ADP non-farm employment change. This was earlier yesterday, where the US basically created 296K jobs in the private sector compared to an expectation of 148. So this was more than double. And in the previous reading, it was 142K. So both the JOLTS job openings and the ADP non-farm payrolls tend to serve as a very good leading indicator of what you might expect to happen during the non-farm payrolls. So later on, we saw the FOMC press statement, federal funds rate, as well as the FOMC press conference. So the Fed basically decided to hike interest rates by 25 basis points from 5% to 5.25%. And this led to a big sell-off in both the US dollar as well as US equities. Then later on today, we saw the European data coming in. Main refinancing rate or interest rates were hiked by 25 basis points from 3.5% to 3.75%. So after this, we saw the ECB press conference where the ECB president, Christine Lagarde, highlighted several times, insisted and repeated 3 times that we are not going to stop the rate hikes. So it was a very clear message that the ECB is looking to make yet another rate hike on the next meeting in order to address the current high inflation environment, which stood at 7% from the latest data that came out last week. So we will be expecting to see further rate hikes happening in the Eurozone. And as a consequence of that, we will be expecting to see a stronger euro in the market, as well as a recovering dollar. So after this ECB press conference, now we had the 7:50 p.m. Bank of Canada Governor Macklem speaking. I believe he's still speaking right now as we proceed with this session. And now tomorrow we'll be looking at Switzerland CPI or Consumer Price Index, which is a broad measure of inflation in the Swiss economy. And after we are through with this, we look at both Canadian and US jobs data. So in Canada, we're expecting that the Canadian economy created 21.6K jobs in the month of April, compared to the previous reading of that 4.7 K jobs in the month of March. So unemployment rate is expected to rise from 5.0 to 5.1%. So of course, we'll be tracking this data closely. So as for the Bank of Canada, we know that it stopped the rate hike cycle. So we are not expecting the Bank of Canada to go for another rate hike. And in that case, we are not expecting the Canadian dollar to be very strong. Remember, the rate hikes are the ones that are expected to strengthen the currency. So if there's no more rate hikes, then it might imply that the Canadian economy is, the Canadian dollar is fundamentally weak, since we are not expecting any rate hikes from the Bank of Canada. So the most important data point for tomorrow will be the US non-farm payrolls, which is basically the number of jobs created in the last 1 month, besides the farming sector, which can be very volatile. So in this case, we will be expecting that the US created 180K jobs compared to the previous reading of 236K jobs. So if the number comes out strongly, that is better than expected, then especially if it gets close to 300K jobs, this will be a very strong signal that the labor market is currently very hot and it's contributing to higher inflation, and the Fed will be forced to react to that in the next Fed meeting. So after doing the 25 basis point hike yesterday, the Fed Chair Jerome Powell basically mentioned that they are ready to do what it takes to push inflation down to 2%, and the current level is still reasonably high at 5%. So in order to get this to 2%, they might have to continue pushing interest rates higher, depending on the data that comes up between their Fed rate decision and the next Fed meeting. So the data will be very important to help us as a guidance on what the Fed might do next. So we might be expecting the investors to be reacting to that. So a very strong jobs report would indicate that the Fed will hike again. So in that case, it would be very positive for the dollar and negative for US equity indices. However, on the other side, that is on the contrary, if the non-farm payrolls come in weaker than expected, let's say the US created weaker jobs, around 180 or even lower, then this would mean that things are moving in line with the Fed's expectations. And the expectation would be that the Fed would maintain rates at the current level of 5.25%, and this would be negative for the dollar while being positive for US equity indices. So now that you understand the events that you're expecting for the week, it's time to look at the charts and see what to expect going forward. So I will be starting with the chart of gold. I think this is the key highlight of the week. So for the first time ever, gold has printed a new all-time high of $2,086 per ounce. So remember, gold is traded per ounce. So whenever you see the price of gold, you know that that's the price of 1 ounce of gold. So in this case, the price level of 2,086, which was hit yesterday during the FOMC press conference, is the highest that gold has ever been. So even if you go to the monthly chart, you'll notice that the highest price that we got during the COVID panic period was a high of 2,070. For some charts, went to 2,074. And then when Russia invaded Ukraine earlier last year, we saw the market hitting a high of 2,070 dollars per ounce. So the movement yesterday was a big move, though it was rejected very quickly. The movement got to 2,086, and this is testament that there's a lot of high risk and high uncertainty in the markets. So if you notice, the last 2 periods gold hit those 2 levels was one when there was a large-scale panic as a result of the COVID-19 pandemic and the lockdowns, and people did not know a way forward. So whenever people are uncertain of what might happen in the markets, then they tend to buy gold as a safe haven asset until the uncertainty clears out, and then they start buying risk assets again. So the other one, Russia invades Ukraine. Nobody knew how the war would proceed. We didn't know whether it would break out into an all-out world war or what would happen after the invasion. So due to this fear, people are dumping equities and going for safe haven assets, and we saw gold rally to a high of 2,070. So now the current movement here, if we try to correlate with what was happening in the markets, I believe following the collapse of the First Republic Bank over the weekend, which was later acquired by JP Morgan Chase for about $11 billion, now became a systemic risk. So investors were very much worried about what might happen to US regional banks. So with these worries getting bigger and bigger, then there was a reason enough to dump equities and go for safe haven assets. So the other key thing that investors were following up on was the Fed rate decision. They wanted to know whether the Fed would stop rate hikes in order to protect the banks. But once Jerome Powell decided to go for a 25 basis point hike, eventually pushing US interest rates to 5.25%, then this basically implied that this pressure from high interest rates could eventually break a couple of more banks in the US regional sector. And once this happens, it's expected to have a domino effect across other firms and across the stock market. So it makes a lot of sense to buy safe haven assets. So we have seen Bitcoin make one of the biggest rallies compared to other asset classes. Currently, I think it's one of the best performing assets. But then it's not just Bitcoin. We're also seeing investors buying precious metals such as gold and silver. So in this case, we focus on gold after it formed another all-time high. So since then, that is yesterday, the market pulled back down and got to a support level of around 2031. So if you go to the 4-hour chart, you notice that this is the same exact price level that was hit here. That was some time back on 5th of April, and it acted very well as a resistance level. So as we all know, once a resistance level is broken, then it becomes a support. So once it was broken here, then it becomes our support. So the market pulled back down early in the morning, and during the London Open, we saw the market bouncing very well. And after it bounced, gold has been moving higher since. So it managed to move all the way up to 2050, and perhaps we will be expecting some further upside on gold as these risks become unclear and people don't know what will be happening next. So there's quite a number of things that are currently progressing, and one of them is some of the biggest losers on the stock market today happen to be US regional banks printing double-digit losses. So for instance, if you look at the top losing companies in the stock market today, we ignore the lumber company here. We have Top Financial Group Limited, which is down 60%. We have USD Partners LP. It's down negative 46. And then you have the PacWest Bank Corporation. So I think this is one of the major highlights and one of the most trending banking stocks that have had some of the biggest losses for the day. And this one is down 45% since the closing price yesterday. So we also look at Census Healthcare. That's not part of the banking. Forotech, and Viva. I'm just trying to focus on the banking sector here. So I know there's a West Bank Corporation. Icon Enterprises is a very interesting story, down 1.2%. So Evans Bancorp down 6%. We have Top Financial Group down 60%. And there are many other banking stocks that have really printed lower outcomes for the day. So a lot of investors are hunting for these gains, where you basically short a very weak bank stock and benefit from the downfall of the bank. And this has become a major theme going forward. So with all these cracks happening, then investors are taking advantage. We know that if more and more banking stocks are going down, then so is their indices. So from what we are seeing from the S&P 500, yes, we had a very good week last week, but then today being Thursday, you can see that it has been a early morning rally followed by a midday drop, and now the market is recovering. Yesterday, a very sharp fall. Tuesday, also another very sharp fall, with Monday being literally, remember the market was closed. So this was Tuesday, Wednesday, Thursday. So the market has only been open for 3 days this week. So that has been the story across board. So last 3 days for the Dow Jones, a very sharp drop, some recovery, a very sharp drop, some recovery, a very sharp drop. So this has been the consistent theme, and we're expecting this to continue for a while until we have another fundamental factor, maybe bringing in confidence in the stock market. So it's very important that we follow this data closely to identify the current and ongoing trends. So as for the NASDAQ, it's still the same story. Managed to trade inside a triangle towards the end of last week, and also on Monday happened to break, pulled back, tried to move up, retested the breaking point, further dropped towards the end of the day yesterday. Today attempted to go up, kept going down, and now it's making some form of recovery. So that has been the story of the day for the NASDAQ. So all these recoveries can be considered as potential entry points for additional short selling positions. So as for the US dollar index, as you can see from Monday, a very sharp drop, Tuesday, a continuation of the drop. And then today, we happen to see a very good spike, especially of the ECB announcement. So the big green candlestick here was during the ECB announcement when the European Central Bank announced a 25 basis point hike. And this basically led to a very big spike on Euro USD. So here, there was a big spike, the euro rose into the dollar. Basically, the market's questioning the ECB decision to go for a 25 basis point hike instead of a 50 basis point hike. So the market is basically telling Christine Lagarde that these rate hikes are not enough to address the current high inflation environment. So if you need to achieve your 2% target, then you're going to do better than that, because if you keep doing that, then we could be seeing a much weaker euro compared to the dollar, since the Fed is more aggressive than the euro, with Fed rates at 5.25% compared to European interest rates, which are currently at 3.75%. So in order to strengthen the euro and achieve lower inflation, the ECB may have to do more. And if that happens, then we'll be seeing the euro being much stronger than the dollar. But for now, it's the dollar that is reigning supreme. So if you look at the dollar index, from this announcement, there was a big spike, and then now the market is cooling off. So we are seeing a reversal of some of the major moves that happened earlier in the day. So even for the pound, it made a big spike downwards, but then it has recovered, retested the previous high, and it's now almost breaking towards the upper side. So we have a pullback, so potentially a breakout. For New Zealand dollar, it's a very clear breakout towards the upper side. So the next target on site is 0.63104, which was a high that we last experienced on the 14th of April. Then we have Euro USD making a big spike after testing this resistance. Notice how it tested this resistance, and then after testing this one, it went for the next one. So there was a resistance level around this area here. So after the market tested this area again, a very sharp drop, a pullback, and a continued drop. But now it seems like the market is reversing the entire move. So USD card making a very sharp drop here as the Canadian dollar emerges as stronger than the dollar, leading to a very sharp drop towards support. So we are almost there. You can see the support was already here. So there was a couple of times the market was trading here, especially on Monday. So now we have hit this particular area. So it makes sense to observe this price action around this area to see whether there will be a bounce or a break. So as for USDN, very sharp drop for 3 continuous days. We are almost getting to the major support level. And once we get here, then potentially we'll be looking for bullish positions. So as for now, it seems like the dollar will continue to lose to the yen. And also there are some hints that the Bank of Japan might change its policy stance, having achieved its inflation target. But also they are very careful since they've been fighting deflation for a long time. So they want to see a very sticky inflation path before they change their monetary policy. So for gold, as I already mentioned, we already here at around 2048. So if I zoom out, 2048 was a major resistance level, now proven to be a support. Sorry, this is 2031. So 2048 was a major resistance here. And now the market is testing this area. So notice how the market goes up, cruises through the level, goes back to the test. And now it's an issue of observing the price action around this area to see whether there's a bounce or a break back downwards. So for Australian dollar against US dollar, it seems like a continued movement upwards. So after the interest rate announcement on Tuesday, early in the morning, there was a very sharp rally, but then the market pulled back downwards and then up and then down. And now we seem to be having some form of a trend line that is shaping up around this area, indicating that the market is printing higher lows. And now after this bounce earlier in the day, we are headed to a previous high of 0.67109, which was the high that we saw here on Tuesday. So for SP 500, it's a major bounce. As we can all see, this was the prevailing support level here. So it managed to get to this area and bounce very strongly. So now we could be seeing the market going for the next level. So there's quite a very important level here, which was acting as the day's high. So we could be seeing the market going back to the day's high before we make the next decision. And this seems to be the same case for the US30 or the Dow Jones. The market could be retesting this resistance. And also for the US Tech 100, the market could be moving further back upwards. So the level is right here, today's high. So we could be seeing this going for 13,096 as the key target for this kind of reversal. So UK oil have been quite bearish. So we managed to see this happening. Market got to a support level of $71.5, bounced really well before pulling back downwards. But then from what we are seeing here and the strong rejection of lower prices, then the idea is that the market will continue to rally until it gets to the previous high of $75.4 per barrel. So USD against the Chinese yuan, USD was currently very weak, printing some downfall for 3 consecutive days. But since the London Open, we have seen some form of recovery, but this is not expected to last for long. So perhaps it's in order to look for short selling positions. So if you look at this trend line here, which has been acting as the support level for quite a number of weeks, then you notice that there was a breaking point. So the market broke the level here. So after breaking the level, it retested the area before pushing further downwards, pulled back again, go to this resistance, and now it seems that the market could be retesting the previous low for the day. So as for the European indices, if you look at the EU40, it's pretty interesting seeing how well this lower trend line has been holding. And since this strong rejection of lower prices and also the announcement of EU interest rates, we have had quite a very strong bull run. So for the last 6 hours, it has been the same story, market attempting to push higher. And now I would say that our next target, if this momentum continues, will be $4,323 per share for the Euro stocks. So for the New Zealand USD, it's the same thing. We are almost completing a pattern that I talked about earlier in the week, and this is what we basically define as a cup and a handle. So we might be seeing the market completing the pattern towards the end of the day. So after it made this almost a cup feature. So the handle is usually like this. So the idea is the market gets to the resistance. So after it gets to the resistance, pull backs down and then back up. And once it gets to the neckline again, then we will be looking for a potential breakout towards the top side. So that's it for today. I'm gonna check on the questions you have, see if I can respond to them before we end the session. So hello, Nelson. Hello, Eric. Hello, Charlie. Thank you. Thank you for joining the session. Where did dollar gain yet employment increased? Kindly help me understand. So the number of jobless claims were, let me see this data here. So the number of jobless claims earlier in the day came in at 242K versus 239 expectation and 229K as the previous reading. So remember, unemployment claims is the number of individuals who filed for unemployment insurance for the first time during the past week. So these are people who are actively seeking for unemployment, but they could not get jobs. And currently, it was 242K. However, this number is still within expectations. So the end of the day, we focus on the major or the most important data points in the week. And it seems like the markets are still having a hangover of what was happening with Jerome Powell yesterday. So if the market overall expects that inflation will drop below 5%, then this could have been the last rate hike implemented by the Fed this year. And once inflation behaves well, then we could be seeing the 5.25% as the terminal rates for the US, which would mean that we start pricing in a potential rate cut towards the end of the year. And that would be very negative for the dollar and positive for equities. So good one. Do you trade news? Personally, I don't. Try to understand what's happening in the news, what key levels and patterns have been created by the spike in the news. And then once that is clear to me, then I'm able to identify a trading opportunity. So if I'm waiting for the market to announce so that I can buy quickly or sell quickly, that's not me. So thank you very much, guys. Thank you for your time. And I hope to see you on the next session. So remember, you have a podcast episode coming up on next Wednesday. Be sure to check out on our podcast channels, which basically includes YouTube. We have Apple Podcasts. We also have Google Podcasts, among other platforms. A good one from Vandi Kagwe. Seems to don't depend on oscillators at all. Is it advisable to keep off if they don't work out? You see, the indicators are supposed to work for you, not you for them. So if, let's say, you have a trading idea and you want to make sure that you have the right trading idea and optimize your outcome from that idea, then you might consult an indicator to check whether it's the right point to make an entry. But then I realized that most beginner traders will be working for the indicator. So they'll be waiting for the indicator to tell them when to enter or exit the market. And that tends to be the wrong approach most of the time. So it's very important to understand that the indicator has to work for you. So it's you coming up with a trading idea, studying that idea, and then doing both fundamental as well as technical analysis of the idea. And in your technical analysis, you might consider adding one of your, let's say, favorite indicators to see whether it will help you improve on your returns. So do you have Bitcoin on MT4? No, we have it on MT5. So just check on FX Pesa MT5. I think you'll find that. Thanks for the question, Eric. Assuming I've responded to all the questions. So thank you very much, guys, and I hope to see you on the next session.